Hey everyone, my name is Jack, and in this video I want to go over 5 different types of passive income streams that you can build as you work towards your financial goals, most notably financial independence. Having multiple different types of income streams will allow you to diversify your income so that if any one of the streams is eliminated or goes south for some reason, you'll have other ones to rely on so you don't lose your progress. There are a lot of actionable ways that you can start building your income streams right now if you haven't started investing already, as there are lots of ways to invest both your time and your money to try and create new income streams for yourself. Let's take a look at 5 important passive income streams that you can get started or continue to build today. The first and perhaps one of the easiest income streams that you can start building today is through dividend stocks. Investing in dividend stocks is one of the easiest way to build a passive income stream, since all you have to do is buy a share of stock that offers a dividend and then hold on to it, and then you'll get paid out those dividends every quarter and start building your passive income stream. Many companies actually offer what's called a DRIP program, or a dividend reinvestment plan, where you will buy the dividend stocks through the DRIP, and then all the dividends that you earn on that stock will then be used to buy more of that dividend stock, increasing the stream exponentially. Besides buying the stock directly, you can also buy shares of mutual funds. I personally invest in Vanguard's VHIAX, which is a high-yield dividend mutual fund. This allows you to get more diversification, but still have access to all the great dividend funds that the market offers. Different types of dividend funds will go for different types of dividend stocks. Some will focus on dividend stocks that have high growth potential. Others will look for more stable, high-yielding dividends. It depends on the kind of fund that you're going for, but all of them ultimately are looking to maximize your income stream over the long haul. Vanguard's VHIAX currently offers about an annual yield of 3.5%. Obviously, that's pretty small in the grand scheme of things, since for every $100 in that fund that a person has, you're only going to get about $3.50 at the end of the year. So you really need to build up a pretty sizable dividend fund if you want to have a true, reliable passive income stream that you can actually live off of. But when you own a dividend stock, you also get to take advantage of the actual growth potential of that stock. Not just the dividend itself, but the price of the stock too, since it is ultimately like any other share of stock. You should be able to buy and sell that stock pretty freely on the open market so that you can always get the return out of it that way, not just through the dividend. Of course, there's a risk with any investment that it may go south, so always be prepared for that as well. Although using a broad index fund is probably one of the easiest ways to diversify your portfolio, if you do want to pick your own stocks, I have a link in the description to sign up for Robinhood, which offers free stock trading. They'll actually give you a free stock if you use the link below, and that can be a way for you to invest in stocks pretty easily if you want to go that route. Of course, if you want the free stock and then you just want to close your account, you could do that as well.
Another great stock brokerage option is M1 Finance. They offer completely free stock trading and have no fees of their own. If you want to start investing in dividend stocks or low-cost funds and ETFs, M1 Finance has it all. Their platform even lets you create your own sort of index fund with a super clear holding breakdown, which is one of my favorite interfaces out of any brokerage out there. You can create your own diversified dividend portfolio or stick to broader funds, or use a combination of both. On top of all of that, M1 Finance also has a borrowing option as well, where you can borrow against your portfolio at a super competitive interest rate without any credit pulls. I highly recommend giving M1 Finance a look. As always, I've left a link in the description below.
Another tried and true way to build passive income for yourself is through rental real estate investing. The model is pretty simple. You buy a piece of real estate and then you rent it out and collect the rent checks each month to build your passive income stream. The rent is used to pay down the mortgage over time, and once that's paid off, you get to keep the revenue stream so that your passive income will grow even more. As your rental portfolio grows, you'll be able to buy bigger and better properties with higher cash flow, and ideally can use some of the equity that you build in the other properties to then re-leverage it or sell it to then buy bigger properties and constantly expand the income stream. With real estate investing, you can also generally take advantage of a number of different tax benefits, including deducting mortgage interest and depreciating the property so that you get large tax deductions to offset that rental income, so you can usually get a lot of it largely tax-free. Of course, be sure to check with the CPA. We'll make sure that you are getting the best tax advantages given your current situation, and because tax laws are always subject to change, and they'll be up to date with the current tax laws to make sure that you're getting the best bang for your buck. Now, real estate can come with a lot of headaches, especially when you self-manage your properties rather than turning them over to third-party management, so you have to be aware of that as well. It's not as easy as something like dividend stocks where you just buy and pretty much forget about it. Often there is a lot more active management depending on your style of real estate investing, and it can take a while to really systematize things to keep the headaches away from you and onto someone else who is actually managing the property for you. Regardless, real estate is a very powerful way to both build wealth and your passive income to help you move towards your financial goals. But if you don't want to buy the actual property itself, you can also invest in things like REITs, which are basically like dividend stocks that instead of being shares of corporations, they're shares of building portfolios, basically. So you get a share of the rental income each quarter, just like a dividend, only instead this is based on real estate. Even if the payoff might not be as high as if you actually managed it yourself, it does give you a larger diversification as well as takes away some of those headaches that you might have if you actively manage the property yourself. Another way to build passive income is through intellectual property. This is just a fancy way for saying things that you create basically with your mind. Maybe something like a book, a blog, even a YouTube channel. It depends on whatever you're actually making. If you're more technically oriented, you might have patents for things that maybe you're not creating yet, but you own the rights to it, and you can sell that and rent it out in a way through a licensing agreement or other things. But in general, when you make something, you typically have some sort of ownership over it, and sometimes you can monetize that ownership to build a passive income stream. You can also agree to buy intellectual property from inventors or writers or other people and then sell it as your own product. This is what a lot of big companies do, after all. As long as you own the rights, it's ultimately yours to do with it what you see fit. Obviously, be sure that you actually own the thing that you're trying to sell and that you have the right to do it. The biggest drawback of most intellectual property is that it takes a long time to produce. The ultimate cost is the time to do it rather than the money in most cases. For example, if you want to sell a book or multiple books, you're going to have to take often many months to write that book, edit the book, get the cover art for it, find a publisher if you don't self-publish. Generally, that just takes a lot of time and effort to get the ball rolling. And just like any other investment, there is a chance that your intellectual property portfolio might not pay off, and you would have spent all of that time to where it doesn't actually produce a big return. So you have to be aware of that as well. There's certainly risks to spending your time building your intellectual property portfolio. But the payoff can be massive. After all, there's no technical monetary cost up front for a lot of different types of intellectual property. It's just that big time cost. But once you get over it, you can really create a sizable passive income stream with your intellectual property. Now, another way to build passive income is through lending. Quite simply, when you lend someone money, you charge them interest on the principal, and you keep that interest as profit. You can also sell the note that binds the borrower and the lender to someone else who wants that revenue stream. So it's kind of treated like a security in many ways. There is a lot of regulations with selling debt, so please be careful assuming that you can just sell it on the open market. There is a lot of regulation that goes into it, so be sure to check with an accountant, an attorney, or a licensed financial professional. Traditionally, one of the only ways to lend was to either be a bank or to actually lend to people one-on-one. Thankfully, times have changed, and there are different options for people to get credit and also different options for people to lend to those people. Today, there are companies like Lending Club, which offer investors a chance to lend their money across thousands of different notes to thousands of different borrowers, giving them a way to diversify their lending portfolio as well. Most of the notes on Lending Club, for example, are about 3 to 5 years, and they give someone the chance to earn consistent passive income during that time, assuming the borrower makes their payments, of course. Lending Club also differentiates the grades on each of the notes, so you might be wanting to have a more stable portfolio, so you'll probably lean towards more A and B quality notes. But if you want a higher return, you can stick to B, C, and D quality notes, for example. Depends on your investment strategy, and Lending Club gives you a way to diversify your portfolio as you see fit. The fifth way to build passive income, which is very similar to lending, is to buy and hold bonds. A bond basically is where you lend money to a corporation or a municipality, and then they pay you back with interest over time. Certain bonds offer different tax advantages. Often many are tax-free if they're to the government, so there's a tax advantage to it as well. But with bonds, you can also freely buy and sell them, just like a stock. So that gives you more flexibility if you want to cash out on it more quickly than if you had a private portfolio of loans, for example. In general, bonds are less risky and also less rewarding than most stock portfolios. This is because in the event that a company fails, it has to pay its creditors first and its bondholders before it gets to its stockholders. This means that in the event of a company failure, it's more likely that they'll be able to pay your bonds back, which lowers the risk. Regardless, they're a great way to build more passive income and diversify your passive income streams. Now, I want to go over a few more important considerations that you should think about as you get into income investing. Income from investments, including dividend stocks, often is taxed at a higher rate than your typical capital gains tax. Sometimes the tax treatment might be favorable, but not always, and it's usually less likely because income is normally taxed as income at your marginal income tax rate, which is typically much higher than a lot of the more favorable tax rates like capital gains. As I mentioned before, I would recommend consulting with a CPA to make sure that you're getting the best tax strategy given your portfolio and your investment goals. Now, the types of income streams that I just went through are not the only types of income streams that you can actually build. For lower risk portfolios, you might consider things like certificates of deposits, also called CDs, which will give you guaranteed FDIC insured income. The same goes for high interest savings accounts. These are generally much lower risk, but lower return as well. It just depends on your strategy and what you're going for in the long haul. Whatever strategy you choose, it's probably a good idea to make sure that you're diversifying your holdings so that if any one area struggles, you'll have other areas to rely on. And income investing is only one part of a balanced portfolio. You should also consider investing in equity stocks and different types of investment products, not just the ones solely focused on income. Always explore your options fully before you commit to any one strategy. That said, creating a sizable income portfolio is one of the best ways to move towards financial independence. It can take a very long time to build up these passive income streams, but once you get there, it is often well worth it since you'll have a lot more flexibility financially. I hope this video was helpful for learning about the different types of passive income streams that you can build. If you like this video, be sure to give it a like. If you have any questions or comments, leave them below. And be sure to subscribe to this channel as I offer new videos every single week about personal finance, real estate, and other things. Until next time, take care.